Hey everybody, so today I wanted to talk about Shopify. Now, I know that a lot of you are probably in this and you've probably just been bag holding through all the pain. And I actually don't own Shopify, nor do I know too much about them. So I'm going to kind of give you a quick view just from like an unbiased position because you could get all these YouTubers and they could tell you all these great things about Shopify and they might not talk about the bad things. So this is just me looking at the financial statements for the first time and just kind of pointing out the things that I noticed that may be good, may be bad, you know. So starting out, I don't want to talk about their Q4 highlights because I feel like that's really easy information you could find. And that's basically what everybody's going to be talking about right away. So that you could find anywhere. Now, what I want to talk about is kind of the information that might not be as easy to find. So, starting with their 2022 outlook, this is coming straight from their 6K. This is a Canadian company. So, here in the US, we would have the 8K, but they have the 6K. So, 2022 outlook, this is what I think probably really hurt them. They said, our financial outlook anticipates revenue growth for the full year of 2022 that is lower than the 57% revenue growth achieved in 2021. Now, what this says right here is, hey, I'm a growth company, but this year I'm not going to grow for you. And this is kind of like the reason why we have such high multiples on this stock is that it's just been growing, growing, growing. Now they're saying, hey, we're not going to grow for you this year. And then we see merchant solutions revenue growth to be more than twice the rate of subscription solutions revenue growth year over year. So that's probably good. The increase of merchant solutions in our overall revenue mix means gross profit dollar growth will trail revenue growth. Also good. Here, stock-based compensation expenses and related payroll taxes of 800 million. So is that good or is that bad? Well, we're going to have to see what the current stock-based compensation is. So this we'll revisit this. And let's just go straight into the financial statements. So this is the income statement. Here they have revenue broken down, and then they got the 3 month and the year. So here we see revenue growth in the subscription solutions. We see some serious revenue growth here in the merchant solutions. That's about 1.5x, I'd say. Yeah, it's about 1.5x, a little bit less. Overall revenue grew quite a bit. Cost of revenue, I don't see anything crazy. Let's see. Total operating expense. Also, nothing too crazy there. I mean, we did go up in revenue, so it makes sense that we're spending more. Now, what I see that is definitely kind of a red flag that sticks out here is this other expense income. And we're going to see what the reason for this is. So I'm just going to copy this. I'm going to go into their Form 40F, which is just their annual filing. I'm going to punch in this number and see what comes up. So here they have this little section where they talk about their other expense. So it says, in the 3 months ended December 31st, 2021, we had other expenses of 503.1 million compared to the other expenses of 2.8 million in the same period of 2020. The increase in expense was driven by a net unrealized loss on equity and other investments of 509.7 million. The unrealized loss is mainly related to our investments in Affirm and Global E due to the changes in their share price from September 30th, 2021 to December 31st, 2021. So keep in mind that these are unrealized losses. So they haven't actually sold anything yet. it's unrealized, and this is just kind of how the accounting is done on their part. So here we have net loss, and that's attributed to this number right here for the quarter. But overall for the year, we do have a net gain. And going into their balance sheet, we see they increased their marketable securities quite a bit. If we're looking at the most liquid assets, they have about 7.7 billion. And if we're looking at their current liability, you see that they have about 702 million. So their most liquid assets can pay off their current liabilities almost 11 times. Now, looking at long-term liabilities, the one that's most notable right here is this convertible senior note. So I'm just going to go into their form F40 again, or 40F. I'm just going to type in convertible, oops, I spelled that wrong, convertible senior note. Then I'm looking for some specific information here, and I will show you that in a little bit. So here it is. It says, in September 2020, Shopify issued 920 million principal amount and 0.125% convertible senior note. It's going to be due in 2025 for the net proceeds of 907.95 million. So they got less than the actual principal value, so they offered this at a discount. Now, one more thing I want to note is that the conversion price is $1,440 per Class A. So right now, the current stock price is way below this. So you don't have to worry about conversion anytime soon. So now let's go down here. And then I wanted to point out this stock-based compensation right here. So earlier we saw that it was 800 million. Now it's 330.7 million. So it's going to increase like pretty close to like 3 times, like 2.5 times. So 2.5x in stock-based compensation. So that's something to look out for. And yeah, it's mostly that for the financials. I wanted to point out something else. So here we can kind of see how they've been diluting us every quarter. So this information, just general developments of the business. Now I'm just going to read this off for you. In the first quarter of 2021, Shopify sold 1,180,000 Class A subordinate voting shares at a price to the public of $1,350 per share. And then that's the amount of money that they got. Right here in the third quarter of 2020, they issued 920. Oh, that's the senior note that I was talking about earlier. And they sold 1,265,000 Class A subordinate voting shares at a price of $900 per share. And that's the amount that they got. And then again, in the second quarter of 2020, they sold 2,127,500 Class A subordinate voting shares at $700 per share. And that's how much money they got. And here in 2019, the third quarter, they sold 2,185,000 Class A shares at 317.5 for a gain of this much. So that's just kind of giving you an idea of how you're getting diluted here. and it seems like it's happening every year. So now I want to go over to the Webull charting. We're just going to take a look at this stock here. So I'm going to go to the 5-year. So, everything looks nice and dandy here. Let's see if we could draw a trend line. And when I say that, I'm just looking at this first half. So, yep, looks like it was following this nice trend line. Yeah, let's do, yeah, like that trend line. When we zoom in, it's catching that wick. It's catching the top of this. It's catching these bottoms right here. And then you can see when we kind of broke underneath this, you saw some serious selling to the downside. We had some support right around here, close to 1,000. Zoom in a little bit. Yeah, it's about like 1,050. We had some more support over here. So that's about 878. Then we had some support. Well, not really support, but I mean, a gap up. And that's around 588. And then I'd say this next area that we could potentially fall to is right here around 462. And you can see it catches this move right here. So it catches that wick, catches the base of that, catches the base of that. So now, I might want to draw one more trend line. Let me just see real quick. Nah, I'm not seeing anything there. Let me see if I could find anything here. Maybe. Yes, I do see something there. So this line could act as a resistance on our way up. But as things stand, we're definitely moving in this downtrend channel. Things aren't looking too good. You can see on the volume profile, there's a massive sell-off here on the 18th. It was a pretty big buy here on the 28th, but I think that's with basically every stock in the market. On the 28th, I remember that was a massive buying day from a pretty bad sell-off. So yeah, definitely that volume profile here on the 18th doesn't look too good. That was in February. Let's see, let's get the moving averages in here. So yeah, we're below pretty much all the moving averages. We got the 200 stacked above. This is in a full bear trend. We have this 20-day moving average. We've just been rejecting. We rejected here, we rejected there, we rejected there. If we do come up and rally, it's going to have to be at this 720 or $700 area. 714.48, that's the exact number. So we're a ways away from the 20 MA also. So, I mean, you could see quite a snapback if we do make it to this 465-ish area that I was talking about. I do think there's potential for a pretty quick snapback up to the top of this trend, which is probably around like 650 or something. And maybe we could break out of this and then we could hit this. And then we could potentially see some pretty heavy resistance around 880. So that's just the charting side of it. Now I did want to show you, and What I want to point out is the PE ratio. So here you could kind of see how the PE ratio was pretty crazy. I mean, our earnings per share here on 2020 was basically nothing. So our PE ratio was insane. It was like 747, paying serious multiples. Um, Here you could see this number definitely went down a little bit. Significantly fell when our earnings per share was going up and stock price was falling. Now you can see our PE is actually around 24.49, but this is actually lagging quite a bit. So this is for the 7th, but today we actually had some serious price action. Let's just look at the chart for the day. So we fell like $45 here, so this number is definitely going to change. So what I'm going to do here is I'm going to pull out the calculator. And our earnings per share is 22.9. And let's look at the stock price. So that's 515. So 515 divided by 22.9. So we're currently trading at a PE of 22.5-ish. So let's just say we want a 20 PE on Shopify. What does that look like? Well, it's going to look like 22.9 times 20, which is 458. So where's 458 here? 458 is going to look like not too far off from where I drew that line of support. Let me just take out these moving averages so we can see a little better. Yeah, 458 is right around this support line that I drew. So if we draw this down a little bit lower, right around here is going to be where we see 20 PE ratio. Let me zoom out again. So yeah, right around there. So I hope this helped with Shopify. And leave a comment down below. Let me know if this was helpful to you.